We're looking at the dollar Canada, and what do you do in a situation where your overall opinion of the market might be bearish? And first of all, why do we have a bearish opinion here on this chart? We'll take a look at the red grab candles. We've been having enough bearish sentiment and momentum to continue to pressure the dollar Canada, again on this daily time frame. And another thing we want to look at is the consistent resistance. Every time this market's come up for air, we can see that it's consistently been met with selling pressure within the wave. And that's as long as we have the red grab candles and the 4 to 6 o'clock angle of the 34 EMA wave, we can say that we have bearish sentiment, momentum, and the downtrend. The other thing that's really significant in terms of what's happening selling pressure wise is this 200 period simple moving average. We have to remember that in terms of what that means psychologically, being below this level and these previous tests here, being below this level has a certain connotation of negativity. And most recently, we have pressed down lower to a slightly lower low before this recent bounce. So all that put together gives us really more reason to be bearish on the dollar Canada than bullish. But one of the things we also have to remember is that this pair really isn't trading in a way that we see a lot of pressure to the downside in terms of consistently pushing to lower lows and consistently pushing to lower highs. So we're seeing a little bit of congestion here, aren't we? Even though we're in the context of that downtrend and certainly the dominant bearish sentiment and momentum, we're starting to congest a little bit here, and that's going to lead to possibly bearish fatigue. And bearish fatigue has an interesting way of inviting more bullishness. So when I look at what I see here, I am a bear, but what am I inviting some bullishness? So the question is, how can we trade this? I mean, when we look at the intraday time frames, the 15, the 30, there's a lot of slop here, isn't there? Now, before the breakout, there was probably a pretty good argument for looking for swing opportunities, but this was the look before the breakout we saw, before this really rapid ascent we've seen. Was this an organized wave? Does this have good clarity in terms of my market psychology? Likely not. Same thing could be said for the 15-minute time frame. Was this a really good, clear market psychology in terms of, here it was, by the way. Okay, in this position, I would absolutely say if we were getting this pullback right there, yeah, that's a swing short. But then we started to get a little bit wonky. Well, at least we made new lows, so the swing short more or less held. And then, boom, now at this point, are we looking at a really clear wave? No. Very different view from here to here. Very different view. And then, of course, we see what happened subsequently. So a lot of traders are saying, well, I am an overall bear on the dollar Canada. I think with these high loonie prices, high crude oil prices will come a stronger loonie. And with that stronger loonie, we would be able to gain on the greenback. And this is the image right now, is the view right now of the daily chart of crude oil futures, breaking up above that recent resistance that had held it in check for quite some time, actually since mid-November. So returning back to our view of the dollar Canada, what do we do now? Well, on one hand, some of you might say, gosh, I'd really like to take advantage of what has been a bullish open for the U.S., but I'm really hesitant because I'm not sure of the kind of follow-through that I might get to the upside. So the perfect balance to that, in my opinion then, is to go to a 5-minute time frame, stay very nimble, and look for opportunities to play between the greens. And I'll do that as long as there is an uptrend on the 5-minute time frame. And quite frankly, if we were to roll over, I'd wait for a 4 to 6 o'clock angle on the 5-minute chart. And then I'd look for opportunities to play between the greens the short side. This between the greens setup isn't quite at a great clarity area, because when I see the 1321, 3455 EMAs kind of tangling like they were, I might wait for a little bit more of an established uptrend. But the 5-minute might be a great way at this moment to look for opportunities on the dollar Canada if you're hesitant to be bullish with all the reasons that we just talked about on the daily time frame. Now, for those of you that want to be bearish and are comfortable with what you're seeing on the daily, this 34 EMA low right here, which is sitting at, let me show you, 99.93, just below the parity level, would be an excellent place to position a short. Now remember, near term we've seen highs as high as parity plus 18 and then parity plus 9, so 1.0018 and 1.0009. But that's not a lot of heat for a time frame like a daily, where our average pip movement range could be much more than just that. Here we see the price movement by hour of day, and you'll notice that we are in the heart of the volatility, but even then the average is about 35 pips to a high of 55, and typically we're only going to reach for that 55 area if and when we have some sort of economic event for the dollar Canada. Now, there are some economic events that will affect the US dollar. Crude oil inventories is one that affects not only the US market, but of course has its relationship back to the loonie. That's at 11 a.m. Eastern. And then there is a 10:30 a.m. BOC review, which is typically a very low heat hot zone, very low, potentially low impact event. It's a report relating to the economy and the central banking that is done by the Bank of Canada. And so it's not a major release, but it is an economic release nonetheless. I think crude oil inventories could have potentially a more impactful effect on this pair. So having said all that, this is the position. It's still based upon that lack of any kind of, I won't say support, because we were able to break parity. We've had momentum through parity. We just haven't had acceleration in a way where parity would then be support. It's still, I think, resistance. So if you take a look at how parity appears overlaid on this chart, there's that quadruple zero figure, and you'll see we've pierced it and we've actually closed above it a couple times, but we haven't had the acceleration. So rather than seeing price action that would show the bullishness of the breakout, then maybe some sort of test, and then a launch, we're just not seeing that at all. In fact, we're seeing the breakout, then we're seeing the weakness, we're seeing retests, but then what we're seeing is, again, more weakness at this level. And that's the way parity has been behaving, and no one owns it yet. No one's actually established ownership of this level. So again, you can keep a very long-term view, taking advantage of parity and even that 200 period simple, or you can stay very nimble on the 5-minute and wait for some clarity and look for some between the greens options on the intraday trend.